What's up, everybody? It's the Common Sense Investor coming at you with another video. And in this video, we're going to be talking about the 100 million share dilution that AMC is currently going through right now. Now, I know there's clowns in the back of the room who's going to question me and say that no, CSI, the forward agreement is only for 50 million shares. But I will tell you this. The forward agreement has what me and Jenny have coined the double dilution effect. That even though it's written for 50 million share dilution, there's going to be 100 million share dilution, and I'm going to explain to you exactly how that's possible in just a moment. But first, let me take a break and say I have finished my complaint to the SEC. You see right there below the title is a submission number highlighted in yellow. I have finished the complaint. I have submitted it to the SEC. Watch this little clip here I made for y'all. And I'm on part 5 of 7 attached to files, okay? As you can see, I've downloaded a file here called Complaint for Market Manipulation and Securities Fraud PDF. That is my actual complaint right here. Now, after I filed the complaint with the SEC, I went over to change.org and I just simply copied the complaint and pasted it in change.org, and I made a petition, a complaint for market manipulation and fraud against Goldman Sachs and AMC Theaters. Alright? It is very, very important, people. If you are an AMC shareholder, you need to read my complaint, and if you agree with it, sign the petition. We need 1,000 people. If I can get 1,000 people to agree with my complaint, I believe we can get a lawyer and turn this into a class action suit. Now, the rest of the video is going to be broken down into 3 parts, okay? I'm going to read the introduction of the complaint to you. Then I've made some slides that's going to represent what the body of the argument is, so I don't have to read 13 pages. And then I'll come back to the actual complaint and we'll talk about what the relief is that I'm looking for, okay? So let's get started. Complaint for market manipulation and securities fraud against Goldman Sachs and AMC Theaters. This complaint addresses the critical issue of blatant market manipulation, disguised as a risk management strategy, as it relates to the recent SEC filing regarding the forward purchase agreement entered into by AMC Holdings Incorporated and Goldman Sachs on December 6, 2024. The agreement allowed Goldman Sachs to sell and or purchase up to 50 million shares of AMC, henceforth the pledged shares, including through the use of forward agreements. Within the forward agreements, Goldman Sachs, or the forward buyer, has the ability to hedge their investment by rehypothecating, selling short, portions of the shares pledged but not yet owned. This risk management strategy, as you will see, was designed not for risk management purposes, but to manipulate the market for financial gain and rob unsuspecting retail investors. In this complaint, you will see that Goldman Sachs' hedging strategy is nothing more than a diabolical excuse to drive down the price of AMC stock, profited millions from the manipulation of the stock's downward price movement. Their deceptive risk management strategy artificially suppressed AMC's stock price, as evidenced by the prospectus, which explicitly warned there may continue to be significant additional future dilution, which could adversely affect the market price of the shares of our Class A common stock. The implication here is clear. AMC's stock price did not naturally lose value due to market conditions. The loss of shareholder value was instead a side effect of the naked short selling positions of the yet to be released 50 million shares. While Goldman Sachs' assertion that their hedging was designed to manage risk, the evidence strongly supports that the true motivation was to create an opportunity for profit by deliberately influencing AMC stock price downward. This is not a mere misstep. It is a deliberate attempt to undermine the market's integrity and take advantage of retail investors who are disproportionately harmed by these manipulative actions. All right, that's the introduction. Now, before we dive into the forward complaint itself, and you will see the argument that I have written, all right, you're going to need to know a couple of definitions. One definition is issued shares. On the slides that you're about to see, issued shares are blue. What is an issued share? An issued share is a share that AMC has registered with the SEC to sell, and then they find somebody to go sell it for them, and once they find a buyer, they issue the shares to the buyers, okay? That's what makes these issued shares. And there's only 375.68 million issued shares in the outstanding float of AMC. Now, what is the 50 million shares that everybody's talking about? These are registered shares, okay? AMC has registered these 50 million shares with the SEC to be issued, but they have not been issued yet. Why? Because they have not got a buyer. So up to this time, we have 375.68 million issued shares outstanding on the open market. Then Goldman goes and sells 50 million registered shares, but not yet issued, into the open market. And this dumps the 50 million registered shares into the pile with the blue shares, and now the blue shares and the brown shares are all mixed in together. All right, that's important to understand. Now this slide represents the 3 steps to the forward agreement from the moment that the pledged shares, the brown shares, are entered into the market. All right, they are brown shares sold to retail investors. Then, according to the hustle, they're going to go the next day and they're going to buy 50 million shares. But I want you to notice something. What 50 million shares did they just buy? They just bought the pledged shares back. They just bought the pledged shares back that they sold into the market. So now Goldman has the 50 million shares that are pledged. And what do they do with them? They settle the trade. All right? They give the retail investors who bought the shares the pledged shares instead of an issued share. So now you got 50 million pledged shares still on the open market. Now, you might ask, well, what happened to the blue shares? That's step 4. And even Jenny missed step 4. I had to lead her down the path to where I said, Jenny, you forgot step 4. And she went and thought about it and came back and said, oh, you're right. There's one more step to the process, and that's to follow the money. Remember, follow the bouncing ball here. We got real shares over here at AMC, 50 million shares, but they're pledged to Goldman. Goldman goes and sells the shares short, closes out the position the next day with the same pledged shares, and now they take the money and they give it to AMC. And the purpose for doing that is to turn registered shares into issued shares. Now AMC has a new float. They're going to add 50 million new issued shares to our float. Well, what is our float? 425 million after they add these to the float. Well, CSI, I thought you said it was already 425 million. It is. Why? Because the pledged shares are still out there. All right? You understand that. They sold 50 million pledged shares. They took the money and they bought the issued shares. And now Goldman Sachs has an extra 50 million shares that they just bought from AMC. So you got 50 million pledged shares on the market, and now you Goldman with 50 million newly issued shares to them, which means what? They can turn right around and sell them 50 million issued shares into the market. It's their shares. They can do what they want with it. They just bought them from AMC, and they used the proceeds from the naked short sales and left the 50 million pledged shares out there. So the float of AMC is not 425 once the deal is done. The float of AMC is going to be 475 million shares of AMC due to this forward agreement. I hope all of that wasn't too overwhelming for y'all. I mean, I know it was quite long and detailed, but if you watch it again, you'll notice how, just look at it as blue shares versus the brown shares, and you can see the whole picture unfold. Now, this is the conclusion to my complaint to the SEC. Under the forward agreement, Goldman Sachs sold phantom shares, that is to say, pledged shares, shares not yet purchased. This artificially diluted AMC's outstanding float and depressed the value of the authorized outstanding float's value. The manipulative practice of using pledged shares as a hedge disproportionately harmed retail investors, further eroding their financial interests and trust in the fairness of our markets. The SEC, as the guardian of market integrity, has the unique power and responsibility to address these issues. While this scheme may align with existing regulatory interpretations, not laws, interpretations, its effect are anything but fair or just. In failing to act, the SEC risks not only allowing such schemes to proliferate, but also further alienating the very investors it was designed to protect. History is replete with examples of practices that were once legal but universally recognized as immoral. Slavery, segregation, and the systematic abuse of vulnerable populations. The law invokes to reflect society's commitment to justice and fairness. Similarly, financial regulation must evolve to address the modern complexities of our markets. Retail investors are increasingly aware of these corrupt and manipulative practices and are calling for change. Their confidence in the market's fairness has been shattered, and failure to act will only deepen this disillusionment. The SEC has the opportunity to demonstrate its commitment to integrity by addressing these issues head on. Just as society has evolved to reject the abuses of the past, the SEC must stand on the side of justice and ensure that financial markets operate fairly for all participants. This is not just a matter of legality, it is a matter of right versus wrong. Retail investors deserve a market they can trust, and the SEC must take decisive action to restore this trust. With that, love y'all, be blessed. See you in the next video.